Hello. It's so good to be back with you. I am coming to you as I am under another big deadline. Oh my gosh, writing a book turns out to be quite hard. I got my copy edits in, but I am writing a workbook. So now I'm on the next deadline for submitting my manuscript for the workbook. And man, there's so much to it. Anyway, today I want to bring you an episode that's going to make use of some of that feeling that you have after you submitted your taxes this year. So, if you had that experience where you looked at your self-employment tax, looked at your total taxes, and your income is primarily coming from your business, and if those taxes felt extra high, surprisingly high to you, in general, the reason for that is because of self-employment tax. When you work for yourself, you pay double the Medicare and Social Security that an employee does because you are the boss as well as the employee. That is in the nature of being self-employed. And what it means is instead of paying 7.65% of your profit towards Medicare and Social Security, as an employee would, you also pay another 7.65% towards Medicare and Social Security as you would as an employer through payroll tax. Okay, so that equals 15.3%. And the background on that is called self-employment tax. That's what self-employment tax is. Okay, so there's your primer on self-employment tax. Now, once your income from your Schedule C starts getting up past $50,000, $60,000, $70,000 consistently, then that 15.3% can start to feel high, right? And there is a tax entity that exists for the purpose of lowering that double taxation of self-employment tax, but it only works when you do it late enough in the game. You never ever want to do it too early. That's actually really important to know. But it is a really great thing, and you've probably seen a lot of ads on Instagram. I get served ads all the time by companies that do S elections for self-employed people, and you've probably been served these ads too. So the thing that I want to be here to give you the real true story about is that an S Corp can really help you, but it's only going to help you if you meet certain criteria. And if you just do form an S Corp without meeting those criteria, you can get yourself in a lot of trouble because there's obligation to having an S corporation. Okay. You have to run payroll. You have to register with your state to be an employer, and you become on the hook for employment law. And that can get very ugly if you don't set that up properly. I have seen states come after people. Believe me, that is not something you want. You're also stuck with an S election for 5 years. So if you form an S corporation, you can't undo it for 5 years. So that's also really important. It's no good if you just get a windfall grant that is for 1 year and your income is going to go back down again, right? So there's things you want to consider when you form an S Corp. And if you meet the criteria, an S corporation in that case can save you money on self-employment taxes. That's the wonderful thing. That's the benefit of having an S Corp. You can save money on your taxes, but it's really there for people who are beginning to make higher levels of income. The math doesn't math if you're not making over $50,000 or $60,000 of profit consistently, ideally much more than that. And there are some states that tax back all or some of the benefit that you get from forming an S Corp. And so it's also important to look at your state, because if you are living in New York City and you form an S Corp, New York City is going to tax back every benefit you ever got from it. And so it is not worth it. It is a cost of living in New York City that you really do not benefit from having an S Corp. I have had many conversations with many clients living in New York City who are really sad about this. It's just a fact. That's what the law is. So today, what I want to do for you is just give you a quick rundown of the criteria about when it's time to consider forming an S Corp. All right. And I have a little bonus for you in this episode, because these criteria are actually something that are in my upcoming book, Taxes for Humans. And so I'm reading you actually something out of the book today. And I have a little bonus if you pre-order a copy of the book. It's available for pre-order now. You can get this graphic as well as a list of tools that I use personally in my business. And I have affiliate codes where they give you, a discount on them. So it's a list of tools and discounts for tools to use in your self-employed business. And the most key tool here is the payroll software that I use, Gusto, because if you form an S corporation, you have to set up payroll. So the way that I do that is through this software called Gusto, which I think is really wonderful. It works really well. I really like it. And I have a coupon code that gets you, $100 off if you decide you are ready for that. So I'm bringing you this episode at this time of year because now is the time you just filed last year's taxes. And this tends to be the moment where you're like, wait a minute, those taxes felt higher than they should have been. My accountant mentioned something about if I formed an S Corp, maybe it's time for me. So I want to give you that metric, that decision matrix that's important. And you know what? If you are not there yet, that is totally fine, right? There's no need to ever become an S corporation. It's something to do when you hit a certain level in your business. And if you do hit that level, congratulations. It's a wonderful achievement. And I'm really, really happy for you. But it's super important that you do it when it's right for the specifics of your business and not just because some Instagram ad got served to you. All right. So here we go. This is my criteria for when to consider forming an S corporation. 1, you're consistently making over $60,000 in profit. Again, this is not a 1-year high profit. This is multi-year because you're stuck with an S Corp election for 5 years. You can't undo it. 2, you are either set up on bookkeeping software and consistently keeping your bookkeeping, or you're ready to do that, right? Maybe you haven't. Listen, we don't come at this stuff from a place of perfection. I definitely don't. So it's okay to be doing cleanup. It's okay to get religion and become better at the thing. That's what this podcast is all about. But it is time. If you haven't had bookkeeping or done consistent bookkeeping yet, once you form an S Corp, it's more or less mandatory. You're going to have to do it. So it's something to do when you're in a place where you can do that. 3, your state. Consider your state. An S Corp is no good if you live in New York City and potentially also in New York State. Other states that have rules that either tax back all or some of the benefit in S corporation, and so states that you need to check your own rules in, include, in addition to New York, California, Illinois, New Jersey, Minnesota, and Tennessee. All right. If you're in one of those states, I'm not saying don't get an S Corp, but I'm saying before you do, check your state rules and make sure an S Corp will actually have a benefit for you and that your state isn't going to eliminate the benefit. All right. Number 4, you're starting to have more money than time. This is kind of a good moment in your business, but it's a tough one. It can be a really tough one. In the beginning of most businesses, you are busy, busy, busy. There are so many things to do. Frankly, there are too many things to do. And decision-making and focus actually are key drivers of a good, successful business because there's just so much to do and you cannot do it all. So having more money than time means you start to have the ability to outsource some of the tasks, right? You can at this point hire a bookkeeper, maybe hire an accountant, right? What I also mean here for this decision matrix, starting to have more money than time, I also mean that you are ready to pay for professional bookkeeping and professional accounting. Now, I'm not saying you need, to hire an accountant for monthly work. Maybe a bookkeeper, yes. But an accountant, it's okay if you're just hiring this accountant for tax time. But in general, you're going to want to do, at a minimum, a consult with an accountant to do the S Corp formation and to talk to them about what it's going to require of you. Super important. When people skip that step, they tend to get in trouble with the S Corp because they tend to not do the things the S Corp requires. So it's really important to get good guidance. All right, number 5. You have the administrative capacity to set up or pay to have set up and run payroll. And you are able and ready to stay compliant with state employment law. Okay, this is really important. I mentioned this before, but you have to run payroll when you have an S Corp. You are registering with your state as an employer and you are on the hook for employment law. People tend to think it's okay to play fast and loose with not paying themselves once they have an S Corp and are running payroll. But the fact is, the state doesn't distinguish, oh, you're not paying yourself, it's okay. That might be how you feel. The state is seeing, oh, you're a boss who's not paying their employee. And so the state does not have a forgiving attitude about that. And so I've seen people get in pretty scary trouble over that. All right. Number 6, you have enough consistent profit to pay yourself a salary each month with money left over. This is a really important thing about forming an S corporation. You're going to have to run payroll. You have to pay yourself a reasonable salary, and you need to be able to actually make that payment every month. So it is for a business who's beginning to have real consistent profit. All right. Okay. And last but not least, you can afford the effort and the expense of an additional tax return. It's called an 1120S for S Corp. And that tax return has an earlier deadline. The deadline is March 15th. So you do your corporate tax return, your 1120S, it's due March 15th. In general, you're going to need a professional, an accountant to do that return. It's not really a DIY tax form. You will need that to be done. The product of that tax return is going to be a form called a K1, and you use that K1 to report the profit you made, and that goes on your personal income tax return, which is due, as you know, April 15th. Okay, so that is the pass-through part of the pass-through entity of an S Corp. You pay tax on the profit from your S Corp on your personal income tax return at your personal income tax rate. That's how it works. All right. So I hope that decision matrix, whether you are there yet or not there yet, I just want you to kind of have that in your head, because maybe it's a goal. Maybe it's a place that you are reaching toward, right? Maybe it's a place you hope to get to. And I'm certainly here to help support you and cheer you on in your journey, moving through your Schedule C business, getting that set up, and when you graduate from Schedule C and form an S corporation. All right, so if you want to get that graphic, that decision matrix graphic, and the list of tools and coupons for those tools that I have, they're my favorite tools that I use in my business, including Gusto payroll software and some other stuff, the program I use to set up a solo 401k and mileage and all those things. You can get those as a bonus when you pre-order my book. So to do that, you're going to go to sunlighttax.com/book. Pre-order the book. I've got links to independent bookstores, other places there. So pre-order the book and send a quick email with the receipt to hello@sunlighttax.com with S Corp in the subject line. So do that. Show us your receipt from pre-ordering the book now, or if you did it before, and we'll give you that bonus, all those coupons and tools and this S Corp matrix. I hope that's really helpful for you. And I'm so excited. I'm so excited for this book to come out because I worked really hard on diagrams and visuals that help to make your taxes feel more visual and more understandable for that visual brain. I know so many of us are visual learners, myself included. So I've spent a lot of time kind of working out visuals to try and make taxes feel more intuitive and understandable. All right, so if you want that bonus, pre-order the book any way you like, including sunlighttax.com/book. Send us a quick email at hello@sunlighttax.com with S Corp in the subject line. Just show us your receipt and we will send you that bonus. All right, in any case, make sure, my final words for you today, in all cases, when it comes to your taxes, when it comes to business setup, when it comes to creating entities in your business, it's really important to be careful who you listen to. You want to be sure you are getting this information from a licensed professional. And you want to be sure if someone on the internet is trying to convince you of a thing, you need to do a little bit of background and just make sure that the criteria are correct for you. Okay, that's what I want for you. If you take nothing else away from today's episode, I want you to know that an S Corp might be wonderful. It might save you a lot of money on taxes, but it might not. And it might get you in a lot of trouble, have you paying an extra $1,000 in accounting fees every year and losing all the money because your state taxes back all the profit that you save. So make sure you fit the criteria before you go out and form the S Corp, not after. All right. I hope that's been helpful to all of you, and I will see you next week. Thanks for being here. Bye.
Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.